Thank you, Mr. Chairman. In his dissent, Roy Woodall, who's the FSOC's designated insurance expert, stated that the underlying analysis for the prudential designation used scenarios, and I quote, atypical to the fundamental and seasoned understanding of the business of insurance, the insurance regulatory environment, and the state insurance company resolution and guaranteed fund systems. Do you agree with Mr. Woodall's statement?
Congressman, obviously the FSOC decision, it was one that I participated in. I thought the designation was appropriate and the risk analysis warranted it.
So you disagree with his statement?
Well, I'm just going to comment on what informed my judgment in terms of the decision that we made.
So just for the record, Mr. Secretary, what is your background as far as experience in regulating insurance companies?
I don't pretend to have been an insurance regulator. I've worked on insurance policy as a policymaker from time to time. But, you know, I think that the responsibility each of us has as FSOC members is to look at a very detailed analysis that's prepared by all of the staffs of the FSOC. It is quite voluminous and detailed. In the case of the prudential designation, I participated in the hearing, and you make your judgment based on the record that's prepared.
So when you don't have a background in that industry yourself, I guess one of the reasons that Congress decided to put these insurance people on the FSOC process was obviously a lot of the regulators that for example, the Fed and the Treasury and others don't really have much background or experience in regulating insurance companies, do they?
Well, Congressman, I would say if you look at
do they have a background or experience in doing that?
For the most part, they have backgrounds in the field that they are in, whether it's banking or securities. But you know, I think that if you look back at the financial crisis of 6 and 7 and 8, the insurance industry was very integrated into the financial system and was very much part of the cause of a systemic collapse. So I think that the question...
The insurance industry was...
Parts of it, yeah.
What part was that?
Well, the AIG was part of it.
But that wasn't the insurance aspect of their business, though, was it?
Well, the inquiry about systemic risk is one where you look at all of the activities of a firm and you look at whether or not it has transmission channels, if there's a problem in that, into other parts of the financial system. And I thought, and I continue to believe, that the analysis done was of very high quality and it warranted the determination. And I'll just point out that there was not an appeal of the judgment either.
Well, one of the reasons for designating Prudential as a SIFI relates to FSOC's asset liquidation analysis. Are you familiar with?
Yes.
Yeah. In which it assumes that simultaneous runs against its journal and separate accounts by millions of life insurance policy holders and a significant number of annuity and other contract holders for products with cash surrender value. This assumes a scale for which there is no precedent. In other words, was there anything that in Prudential that you would indicate that they'd ever experienced a catastrophic liquidation of policies or surrender of policies?
The question is not whether something has happened, but whether there is a systemic risk in the future. And I think the scenarios that you look at tend to be scenarios that have not been experienced because your goal is to avoid having a financial crisis that you could avoid.
Well, the only problem with that, Mr. Secretary, is trying to forecast cataclysmic events. Really, I don't know that anybody has any expertise in doing that, but trying to come up with these what-if, I could come up with a lot of what-if scenarios where you wouldn't want to put your money in any financial institution. But the problem is when you start going down this road, is that you impact, you know, the business model and the customers that rely on a lot of these financial products for something that you're not sure is going to happen in the future, that has not happened in the past. And so I think, and then when you ignore the expertise of people that have been put on FSOC to give you some guidance in that area, I think that's one of the reasons that you hear so many of us question, you know, the methodology that's being used in this process.
Well, Congressman, you know, I don't disagree that the scenarios that you look at are not the likely scenarios, but that's not our task. Our task is to look at, in a crisis situation, is there a risk of financial stability being undermined? And, you know, we know what the recession of 08-09 looked like. We know what the Great Depression looked like. There are scenarios that we've gone through in our history, and it's not just pulling scenarios out of the air. The question is, in a time of great stress, is there risk? And if there's risk, it doesn't mean that you're changing the business model all that dramatically. It's a question of, is there greater oversight and greater scrutiny?
Time of the gentleman.